I'm sorry to start out with such a dire note and talking about a bull crash in sentiment, but if you have a strong stomach, I understand there are opportunities to be had. Set us up for the day ahead. We know we're going to hear from NVIDIA, but also the Fed. What should we be expecting and watching as investors today?
Sure. I think housing's huge data today. Are we ever going to get out from this housing slump? Are we ever going to see housing prices come down? So I think that's going to be a big data drop. Obviously, all eyes tomorrow on the Fed. What's that dot plot going to look like? I think that's fascinating. You kind of Bauman up there as the hawk saying no cuts. You've got Goolsbee and Cook at the bottom saying, maybe 100 basis points of cuts. So I think it's a really important, more so tomorrow, with what Powell's going to have to say. I think I'll be shocked if they don't stay status quo and keep rates steady, but we'll be very fascinated what he says. I kind of want my Fed bingo card, right? It's going to be data dependent. They're going to be patient, a wait and see mode. I doubt we're going to see too much, but I'm very curious where they see the risks, how they're weighing, upside, downside risk, as well as where that dot plot looks like, because that's going to be a really, really interesting update.
Yeah, absolutely. I mean, as you're looking overall at the markets, the setup with the macroeconomic environment, word from the Fed, do you think this is a time potentially to get brave, put some money to work, or are you seeing some more chop ahead where maybe it's not quite time to jump in on equities?
Yeah, that's $1 million question, right? We call it buy the dip or beware the bear. Where are we right now? And we're a little bit in no man's land. We tend to think that the bull market's still intact. It definitely bent hard, but then you had two 90% up days. You had some nice kind of rally there to put some more supports in. So right now I am a little bit of a dip buyer. I think it's going to be choppy. I think without a doubt, it's year 3 of a presidential cycle, which is historically choppy. And if you look out this year, I think your easy money was made in 23 and 24. Going to be a lot more prepared for volatility. You need to not knee jerk around and panic sell, but it's always typically a very good idea to be buying when everybody else is selling. And so when you talk about the B of A data drop saying, hey, we had all these retail sales, sometimes to me that's contrary and bullish. If everybody else is selling because they're panicking, some of that may say, okay, there's some good names getting discounted here for no reason other than we're just seeing a capitulation in sentiment.
It does seem to be a little bit of fear, though, in the market, obviously, with other action that investors are taking. Gold prices, for instance, moving up here a little bit, often looked at as a safety trade. What do you think about moving into sort of safety trades or keeping some money in cash or going to fixed income while we're still seeing rates relatively high?
Sure. We call it the dig trade, right? Dividends, international gold, hedge a little bit, lean into quality, lean into defense. Without a doubt, I think it's good to be a little bit lower beta right now. Have some good quality, boring blue chip names. Nothing wrong with your staples, your health utilities. You're getting some good yield still. You can T-bill and chill. That's not dead. And obviously gold is still running hard, because there is so much uncertainty. And we saw that with the uncertainty spike. The VIX is still pretty subdued and we still didn't get a 90% washout day. So that's why I'm saying I don't think all of this is behind us, because if typically VIX over 30, 90% down days, those are capitulation signs. We didn't necessarily get it, so I could see some more chop. So no problem at all playing a little bit of defense and shoring up and kind of waiting out this vol with a little more safety.
As we're about to run out the clock here, Victoria, I'd love for you to set us up for the day. What is your pick of the day if you had to pick one?
It's Cheniere, man. It's the pure play LNG export. It's a fantastic place to be. They're looking to grow their EBITDA like 17 to 20%. And I think it's something you should hold in this environment.